Welcome back to the channel. My name is Brad, and we're going to talk about Cony today. Its current distribution rate is 155%. I say that with a little sarcasm because it floats all over the place, but the last distribution, it's 155%. And this is according to their website. Not Brad's calculations, not anybody's calculations. If you don't know, I recently retired, a couple of months now. I live on my distributions. I don't have any other salary, income, or a job. And I am presenting this just as informational only. Seek financial advice from a financial professional. If you want to pay them thousands of dollars and them give you bad advice, just throw it out. Or CPA or lawyers. None of that applies to me. All right. But this is just Brad walking through some test data and give you his thoughts as we go through. I believe in total returns. I think some people do not believe in total returns. I think some people have made videos that they don't believe in total returns. And I think some people have made comments to fund managers that they don't believe in total returns. Well, those people are dangerous. And let's go through the data and show you why. If I look at Cony and I look at it and say, wow, it is way down on price. And you can go back and look at a couple different price areas that are important. The start date, December 28th and March 28th. These dates are important. They're very important. That's when it was at all-time highs, or very close to all-time highs. It got back up, it got back down. Will you ever get back up to all-time highs? Probably not. But what people don't understand is how these funds actually operate. And that's the dangerous part of other people talking about these funds, not knowing how to calculate total returns or even looking at total returns. And I don't even know what they're looking at. I don't even know what they're looking at. So let's go through this one by one. Let's first talk about some of the important factors of Coinbase, or what Cony is written off of is the underlying of Coinbase. I said this yesterday. Coming up December 15th, that's this month, they'll be able to account for the Bitcoin correctly on their balance sheets. It is what it is. You can go out and research it yourself. But what companies are affected? Yesterday I told you about MicroStrategies. Well, if I look at the list, I see on the list Coinbase. Coinbase has 9,000 Bitcoin. Not quite $1 billion, but $859 million. And the next one I'm going to point out, because this is going to be a video later, is Square. Square is also buying Bitcoin. Now, if you don't believe in Bitcoin, all honestly, you might want to stay away from these kind of funds. I will fully be transparent. I only have Cony in my test that I'm doing from YieldMax versus Roundhill. Link above so you can go see it. There will be an update tomorrow on how that's actually doing, because I'm just putting $1,000 in, put all these different funds, and I'm testing them against each other so you can follow along for entertainment purposes. So how did the backtesting do? That's really the question. How did the backtesting do? And we're going to start with the start date. If I started with the start date and I do total returns minus 8%, it appears that you would have $121,000 in your account, taking 8% to live off of. That's actually not bad. That's a really good amount of money that you could live off of. I will not be doing it. I will not be investing in Cony. I'm only pointing out the possibilities. What happens if I take 20%? Well, you're down to 115,000, but you could take 20%, and $833.33 is 20% of the original investment of $50,000 divided by 12. That's all it is. So you can live off of $833 a month off your $50,000 investment if you invested at the beginning. And that's the important part, at the beginning. Well, here comes all the fun. December 28th, it was at all-time highs, and it will probably, price-wise, never get up to all-time highs again. So the testing shows that if you only took 8% and you bought it at all-time highs, you would have $67,546 taking your 8%. And you bought it at all-time highs. That is what the difference between price and total returns are. And people that don't believe in total returns, I don't know what they're thinking. I really don't. I don't know what they're thinking. I really don't. Total returns minus your percentage that you're living off of, or the percentage that you're reinvesting. Taking the same date, December 28th, all-time highs, and you took 20%, $833.33 on a $50,000 investment, and you took that monthly, you end up at $62,589. That's where you end up. So you still have more money than your original investment, and you've been able to pull out 20% and live on this extravagant $833 a month on a $50,000 investment. I personally don't advise this. This is really risky, and I mean risky, but these have been the results. 100% the results. There's no denying the results. The data shows what it is. All these spreadsheets are going to be available to the members, and if you're not a Seeking Alpha member, you should think about it. Sale's still going on, because I get a lot of this data and download it so I can run the back testing from Seeking Alpha or Yahoo Finance. One of the two. Now, March 28th. And this was very, very important, because this was specifically pointed out to Jay that these people will never get their money back, and I didn't know what these people were thinking. So if you took 8%, if you invested $50,000 starting on March 28th, and you took your 8%, annualized, $333.33, you're at $55,251. You're above board. You made all your money back if you only took 8%, and you're actually ahead of the game. Again, I think this is risky. It's in my test. I think you can take something out and play with these funds. These are not retirement accounts that you should be trying to retire off of. But if you're younger and you want a little more risk and you want to play the ponies, this is something that you can actually do, and it's probably a lot safer than playing the ponies, actually. So the grand test. The grand test is you invested March 28th of this year, and you took 20%. Where did you end up total return wise after taking $833.33 every single month to live on your $50,000 investment? You end up at $51,343. So you are just above that threshold of where you started. Congratulations. If you're taking 20%, you are now above board, and you're able to live off of 20%. And that's just me. Congratulations, you can live off of 20%. I hope you found this entertaining and informative. I will not be putting any more money into Cony besides doing the testing, but this is something that you may or may not want to invest in. I'm only sharing the data with you of if you bought it even at the peak and you took 8 or 20%, you are above board. So I don't understand why other people are crying about it. I really don't. So congratulations to all those that held in on Coinbase or Cony and was able to get above board and take your 8 or 20% and made it through a down market. Until next time, God bless.